And we're live. Content provided at the event is for general information only and not intended to provide specific advice or recommendations for any individual. Any performance referenced is historical and no guarantee of future results. All indices are unmanaged, may not be invested into directly. Any economic forecasts set forth during the event may not develop as predicted, and there can be no guarantee that any strategy will be successful. These thoughts and opinions are those of Gimbal Financial and do not represent the views of LPL Financial. Securities offered through LPL Financial, member of FINRA SIPC. Investment advice offered through Gimbal Financial, registered investment advisor, and separate entity from LPL Financial. We are Gimbal Financial minus Debbie this morning.
I wonder what product that is that has sharp functional edges there. That's quite a disclaimer.
I don't
Must
know.
be a knife, probably a knife.
If you have any insight on that, I know you found that disclaimer while wandering through Walmart one day, but knife would be pretty accurate.
Somebody, they called me yesterday and they watched one of the Curious Investors you put out there, and they said they love my disclaimer because I just rant about how risky it is to do anything with me, and don't pay attention if you can't handle the risk. So I give you plenty of disclaimers on that thing.
I think, a sharp knife in the market, like, isn't there an old saying that says, don't try and catch a falling knife or something? And so, like, when a stock's going down, you don't want to try and catch that one. You want to hit the floor.
I don't like to brag about myself often, but I am an Eagle Scout, and one of my training processes was one of the scout leaders had a two-edged knife. I don't know if you're familiar with two-edged knife, and he pointed out how both sides cut, and I wasn't one that listened very well, so I've caught a falling knife before, and it's not a pleasant thing. Let's just put it that way.
Noted. Well, speaking of risk, I thought we'd start off with some COVID information that we were looking at just before we hopped on here. Like you said, life is risky.
It is.
No matter what you're doing, in today's day and age, we could be walking outside, and it's risky, but it's worth living. One of my favorite things, so this is a service or a vendor that we trust their opinion. We don't fully endorse them, or these are strictly our opinions. We like what they have to say. And this is their weekly COVID update. Each week they put this little factoid up at the top, and this one says that for every reported positive COVID test, there are another 11 other COVID infections with estimated range from 6 to 24. That's a lot, if you ask me. Just to think that with 11 potentially other people could also be infected. But with that being said, and these numbers are from 2 weeks ago, but the fatality rate still continues to be pretty flat. What do you guys think?
Go ahead, Doug.
I was going to say, I too, like you guys, enjoy this COVID-19 tracker. It's a way to get the data into my head rather than just all the emotion. In a family where we have young kids going to school, and my wife's a school teacher, there's a lot of things to process. There's a lot more things to process today, even today. And here in Indiana, we had some news come out overnight where Indianapolis area was shutting down schools and drawing back on how you can participate in out of the home activities. And so it's really great to refresh with data and stew on it for a little bit just to see what it means.
Yeah, I've mentioned on here before, I've had bouts, probably 2 really serious bouts of depression, and what for me, what I believe is that I start thinking wrong, and then my body chemicals get out of whack, and I know everybody won't necessarily agree with me, and we try, I think, on this to be as honest as we can, and we know that everybody doesn't agree with our opinions, but like that opinion, I know that not everybody agrees with. For me, when I think wrong, my emotions get out of whack. And then when those emotions get out of whack, my body chemicals get out of whack. And then it's a downward spiral from there. And so over the years, what I've learned is to look at things on a more kind of unemotional way and try to sift through data like this and see, does this make sense to me? And so when I see that top thing that you pointed out there, Amanda, that there's a best guess that 113 million Americans, or 34% of the population, has already been exposed to this and had some form of it. I kind of have to believe that. And my own opinion is it's probably lower than that, because we're about 100% sure that my daughter Kelly had COVID in our house with 6 or 7 people in there. And the high risk part of COVID is this R0, it's the contagious factor of COVID. And so if it is contagious, then probably some of us got it, right? Like if that part is true, if then is what I'm saying. And so we're about 100% sure she had it. She lost the taste and the smell, and she was amongst us in that. And so my guess is if that number is somewhere from 6 to 24 have been exposed to it, our whole household might already have got it, including my 81-year-old uncle. And so I think the other thing, when I look at that data, there's treatments that are improving for people. I've heard Z-Packs have helped people that had previously maybe been on ventilators, help with some of the lung problems. My own observation is that when I'm talking to clients and friends and things, that a lot more people are being tested positive, but their experience is a lot less aggressive than what I heard in March and April. We had some friends that had 3 high-risk people in a household. All 3 of them contracted it, and all 3 of them had relatively moderate symptoms of it. And in April, I would have suspected a good number of them may not have survived. So my observation is that either we're treating it better, the virus is mutating and not as deadly as it was, or maybe I'm just clueless. So there you go.
Or maybe we just overall know more. We look at how much change we've gone through. We've learned a lot than what we knew back in March. And so those people that are at high risk are probably being a little more cautious, just because we know that to be effective. There's a lot of different things.
I was talking to one of our retired clients who is a chemist and pretty well read and not one to, he's pretty just data driven person. And he was pointing out an article that he read this week that talked about cloth masks, which I've heard that they're not very effective. But what this article is saying, that they are effective because they're somehow, and I'm not, a scientist, so I don't know, but somehow that they are reducing the size of the germs that get through, and that people are actually getting exposed to smaller portions of COVID and actually building up the immunity. There was some medical article he was reading about that, which I found was pretty interesting.
Go ahead, Keith.
I was going to say, so to say all that and to tell you where my weakness is, I could watch the news and get, I could find myself in the fetal position worrying about this. But the reality is I think there's a lot more positives about what's going on than reason to have anxiety over it.
And as my experience, just talking with many clients over the last few days in particular, is some of you out there are lonely. And you might not have seen your grandkids for several weeks, and we've got Thanksgiving and Christmas on the radar, and you're wondering how this is going to look. And I'd just like to encourage you to be real creative with that at your own comfort level. If that's driving by with the window down for a little while, or standing outside even though it's freezing cold, whatever it takes, I'd really encourage you that, regardless of this data, I would really encourage you to allow people to see your eyeballs and be with them, however far apart you have to be for your own comfort level. But I'd really encourage you to fight that loneliness by just taking the chance and getting out there.
A couple of last things that I have on this, like we moved my uncle in with us on the like at the peak of this, about the middle of March, and trying to take care of him in our house and respect his situation, because clearly the data shows that the 25-year-olds and younger, that this thing is not doing anything to them in a significant manner, that the 2018 flu is much more dangerous to them. And my household has those people in it. And so having an 81-year-old and these young people who are more apt to not pay attention to the rules made our kind of environment a higher stress place to have people in there. So we walked that tightrope, and we were finally comfortable enough to allow him to move into an assisted living last month. And so, I mean, you know, in March, I wouldn't have done that. I love my uncle, and that was a dangerous decision because the assisted living didn't know what to do with it. And there was a lot of risk there, but he is a higher risk person, and he has to respond to this thing differently than my children do. That's just what the data tells me. And so that was one of the things I wanted to say. The second thing is, if you would scroll that up a little more for me, Amanda.
Yeah, do you want to talk about the Europe versus, or what?
Yeah, we were having a discussion, and Amanda was telling me maybe I'm colorblind, and then I tried to have her explain this chart to me, and she couldn't do it. So it's the chart right there that says that COVID-19 Europe cases versus the United States. And I don't know if we ever got an answer, did we? What color, which one that is?
As I zoom in a little bit, it's either, gosh, they could have chosen some better colors here, but that peak is either UK or Belgium.
Yeah, I thought it was Belgium, but yeah, but anyway,
I bet you're right.
I was being dissed, as they said earlier, but and what we do, and we'll be talking about this when we look at stocks and things, and what we do, that ascent of that slope is not sustainable. So the left-hand side of that little mountain there, whatever country that is, that's not a sustainable ascent. Like, you could be freaked out that it's going up at that point, but see what happened when it peaked out there at 1400? It came down at the exact same angle, and nothing is saying that won't happen with any of those other ones. But the United States, I'm pretty sure, is right below the 400.
Yep.
There, and so
darker line. Yeah.
So anyway, you know, this thing is running its course, I think. And so the good news for whatever country that is it's dropping pretty dramatically. And so I don't know what they did and if they acted properly or what, but it's what happened. That's all I know about this, and it's just my opinions.
Are we done with this, or?
Yeah, that's good. And you know, I was telling you guys that I love Belgium. I was there 1 year ago and got to have a Belgian waffle in Belgium and see all kinds of cyclists out and about. It's a great country, so I'm cheering you on, Belgium. The stock market, it's been just the wildest of times. On Monday, I witnessed one of the craziest days I've ever seen. And Keith, if you want to go ahead and pull that up while I'm talking here, we can take it. Let's take a look at the Dow Jones. Rarely do we ever look at the Dow Jones on this show, but I'd like to take a peek at it. And as you see it, just remember the Dow Jones is a collection of 30 stocks. That's it. It's 30 stocks that go to represent our economy, and these 30 stocks, they are just under 2020's high. And so they haven't fully recovered up there like the technology NASDAQ stocks that we've highlighted on this show many times. And what we saw on Monday was a big gap up. Keith, you want to put your cursor on that gap for us? And a gap basically is when the market closes at one price and then opens up or down a lot higher or a lot lower. That's a gap. And you see that gap. Oh, good arrow, man. That is awesome. Yep, there we go. And so what we started to see on Monday was really unique. And as a student of the stock market, I just got so interested in that day and started to dive into why is this happening? And the best I could come up with, in my opinion, is we're just starting to see a rotation of the leaders. And several of the stocks that were COVID champions out of March through September 2nd or 3rd really fell off. And some of the other stocks that pretty much have done nothing, and I mean nothing, they fell and then they went sideways. They had nice kick-ups. And so we started to see some of these travel stocks do well. Some of the airlines did well. Disney did well. And so it was a very interesting day. And so I think we're in a period of rotation right now. And so this would be the time where if we were all on the Gimbal 1 airplane, Gimbal doesn't have a jet, but if we did, that'd be really cool to call it Gimbal 1. And this would be a time where the captain would say, hey, we might be experiencing some turbulence ahead. And so go ahead and put on your safety belts and don't roam around the cabin. And so that's the way we've been treating portfolios lately is we have the seat belts on, but at the same time, we're still moving forward. The market's been overall showing signs of strength. It's just the individual names are a little harder to find right now. And so that's what happened on Monday. And it was all spurred on by Pfizer stock. Pfizer announced that they had some real positive results to fight against the coronavirus. And one of our friends put out a tweet on Twitter or on his news alert, a Reuters article. And it was a really great article. It helped me understand going on and this potential good real challenge is it boils down to refrigerators. And in order to store this potential winner from Pfizer, you have to keep it about 90 degrees or negative 90 degrees Fahrenheit. And there's not a hospital out there that can do that right now. The Mayo Clinic in Minnesota, they can't do it. So if they can't do it, no one can do it. And so this is a great opportunity to see the economy succeed. There is somebody out there who is going to win the refrigeration business, the logistics business of this. And so who knows when things are implemented, but there's some real signs of success. There's some signs of new leadership beginning. And we'll be keeping track of that for you. You guys got any other color towards that?
Well, I think the reality of the I'm getting some feedback on what that's coming from, but the change in the market. So if I switch over here to the NASDAQ, so you see that gap over there to the right on the Dow, and then if I switch over to the NASDAQ here, the NASDAQ, I think this would be Monday's activity right here.
Right.
Which actually went the opposite direction. See where this red line is here? I create a lot of information for you clients and friends out there. And so I can't remember whether I've written things, spoken things, but one of the things I wrote earlier in the year or said earlier in the year is I don't like long lines. I drove on the way into the office this morning. I noticed that some of you enjoy your Starbucks so much that you'd wrap your car all the way around the Starbucks building, which there's no way I want a cup of Starbucks that long to wait in that line. But I bet there's 30 cars in that line. And I've seen that at the Dunkin' Donuts before. And my kids have been to, on average, 49 states, but they've never been to Disney World because of their dad, because I won't stand in lines. And so I'm just not a big line guy. But if you look at this chart of the NASDAQ, is that on your screens right now? When you see me and I'm looking to the right, that's because I got two screens, and the one screen that has my camera, the other has my charts on it here. So over here on this left side of the screen, if each one of these colors, whether it's this red or what's the other color there, Amanda?
Is it the green, purple? Like
no, the daily lines. What color is that? Is that fuchsia? What would you call that?
Oh yeah, let's call it magenta.
Magenta, okay. So you got the blue or the magenta there. Well, if you look over here and see how short these lines are, they're very short lines. That's the safer market to be investing in. And then over here, we had a gap right here, which Doug explained to you earlier. That was kind of early warning system to the market that this market isn't what it was over here. And see, the line was really long there. Then we had a gap up that reversed off of that, but the lines are starting to get a little bit longer. And then all of a sudden, almost the same amount of time over here, we had a major gap down. And these lines, see how long they're getting over here? They're just getting longer and longer. And when these daily ranges of a stock price, when those lines get longer and longer, that's what one of our friends calls a hard penny market. It could be, this is still an upward trending market, but it's hard to earn a penny in that kind of market. And over here, he would call this an easy dollar market. So then when we started getting those gaps and then we started getting the long lines here, it's just a dangerous time to be an investor. And so just when you start seeing that kind of behavior, it should send up some warning flags. And so then if we spring forward over here to August, we saw some gapping going on here. We saw the lines starting to get a little bit longer. Then all of a sudden we had this day, and then these lines started showing up a little bit longer. And then we had a rally and then another sell-off. And then we got really sketchy activity going on right here. So that the longer lines that are going on over there just suggest to me that this is going to be a choppy market, just like Doug said. And so it's not for the faint of heart to be jumping in and doing things. I can show you one of the people that got smacked in the face this week. The Zoom, was a big beneficiary of the COVID, and the stock ran up like crazy, and then peaked out at 600-ish right over here, but it dropped 100 points on Monday, and it's just not looking like a very healthy place to be right now. And so there's a number of stocks that sort of thing is going on. And when Doug uses the word rotation, it just means like we're spinning around from the companies that were leading the way to companies that maybe are going to lead the way going forward. And so like the reason Disney, if I punch Disney in here, let's see if I can get a weekly one that might be a little more. Yeah, so you see it where Disney peaked out right here, looks like about 150, and then dropped all the way to 80, and then it didn't really recover very well while the market was recovering. And then this is that gap on Monday, because how can a company like Disney make any money if you can't go to their parks, right? And
well,
so
I want to weigh in on that, and we're not endorsing Disney, but I are encouraging you to buy or sell this stock. But with Disney, it's a very interesting story, because they have a great online media program. I mean, they've got 120 million subscribers, and Netflix has 195. But this stock did not behave like Netflix at all during the pandemic. And that wasn't just because The Mandalorian hadn't come out yet. Season 2, watch that. That's a real good one, by the way. That is a recommendation, by the way. I fully support.
These are not the opinions of Gimbal Financial.
Those are the opinions of Doug Tree.
But to Keith's point, with COVID restrictions, and then specifically California's restrictions, it was a tough time for Disney to make money, even though they have a great online presence. And so they have a more diversified business. And when the rotation began on Monday, that other part of their business that's not so much the media side, there was some hope there, some optimism. That's why the shareholders voted to go up.
I think I'm going from memory here. That's pretty scary that I remember stock charts, but I think this move way over here, where it jumped from the 140 level up to the 153-ish level there, that big move that one day was when they first announced that they were going to monetize and go into the media business. And so that was just a little over a year ago. But I think one of the challenges for media type businesses, and I don't know about you guys, you can answer this for myself, but at our house, we have both Hulu and Netflix, and we're not really married to any of those, but they both, when you stack them on top of each other, all of a sudden you can get to a much more monthly expensive delivery system than the old-fashioned cable TV. So we don't subscribe to Disney because we don't have enough time to watch all the junk that's on the ones that we have. So I add another one. So that's what I think will happen with those media things. I think people will just start sorting through which ones they get. I don't know. How do you guys, what's your like psychology with that particular aspect of the economy?
Well, I think that's the beauty of it is you have choice today. And so whereas before you didn't really have a lot of choice, you could just pay the cable bill. But now for us, we've got young kids who like Disney's programming, and it's a good fit. It's also a good fit because of packaging deals, like with Verizon. We have our cell phone service with Verizon, and so they let us test drive it for a year. And then what will happen is I'll pull the plug after a year and my kids will say no, and so I'll have to go back and buy it again.
Do those things have like, do you have to commit to a year, or can you do month by month on those things? How's that work?
Yeah, with Verizon, at least with the plan we have, they give you a year of Disney Plus. Which
no, I'm talking when you go directly with like Netflix or Hulu or Disney. Do you guys know? Is that a you commit
from my experience, it's a month to month. And so yeah, I love the speed of that from the consumer angle. And things are just getting faster and faster about what you can group together. Amanda, you go ahead. Tell us what do you do with stuff like this?
Well, I think especially when it comes to Disney, if you are a Disney fan, you will have Disney Plus, regardless of what your age is. They just have such a huge following, and they were pretty smart too. I think they offered a bundle deal with ESPN and Disney Plus and Hulu. So like you just said, with those bundling options, you kind of get the best of both worlds at a premium, but it's catering to pretty much everyone in your household at that point. So,
well, if any of you viewers can help me figure out, keep this quiet, as for a Christmas present for my wife, I need to figure out how to get the Hallmark channel because she loves that stuff. And
now's the perfect time to get it.
When mama ain't happy, nobody's happy. And when mama's happy, everybody's happy. So if I can get some Hallmark, I'll be loving it. Hey, I jotted down on my business card like the 5 principles that I think people should, particularly young graduates, should consider about finances after the development of what I've learned through the years. The first is to think differently. The second is to buy wisdom. The third is to like what you do. The fourth is to live adventurously. And then the last one is generosity wins. And I just wanted to, but I know we're running out of time. I just wanted to pounce on the buy wisdom thing. Is that we believe, one of the great assets we bring to the table is wisdom, the ability to see things in a different way than a lot of our peers and competitors. But we also believe in buying wisdom from people that are smarter than us and wiser. And so this weekend, Doug and I get to sit in front of a screen all weekend and get some very intense training from one of the smartest people on Wall Street. And so we're excited about that. But we'll probably be a little exhausted even coming back to the office on Monday. But I'm excited. I don't know about you, Doug. What do you think?
Yeah, I am. I'm really excited about it. In the past, we've done some fun trips to destinations where we get to play and learn at the same time. But there's something just really wonderful about learning. It's one of the secret ingredients to the good life is to keep learning. And so, yeah, Keith and I will be doing that this weekend and even into next week. It continues. This is a two weekend deal for us to learn more about stocks, and with the goal of helping you. And that's our desire. So it's going to be a great weekend ahead. I'm pretty stoked about it. I got my coffee ready. I'm going to have plenty of coffee ready to go.
I am. I'm not doing Curious Investors tomorrow because I'll be getting trained. So I'm going to do it this afternoon, and you'll have to watch it taped instead of live. The time that we get with these experts is just a real blessing. These will be people that probably our grandchildren will be reading about these folks and how well they trade in the market. And so we're going to get some time with them, and we're pretty excited about that. And so it's going to be a great weekend. It's an honor to help you all and serve you and spend time with you. And we hope you guys can live safely, live adventurously, and enjoy the weekend.
One last plug. You talked a lot about gaps today, and Keith discussed gaps in The Curious Investor. So go check it out on YouTube. There's a whole one dedicated to gaps. And like Keith said, have a great weekend all.